behalf of the International Fiscal Association and DLA paper, it is my great pleasure to welcome you all to this really important briefing on European update on digital services tax. There appears to be a growing sense of optimism or perhaps expectation in recent weeks with the supporting statements by US Treasury Secretary Janet Yellen and also our recently appointed Secretary General of the OECD, Matthias Cormann, that something really positive and tangible will be delivered on pillars 1 and 2 in the coming weeks or months. However, given the focus on dealing with the emerging challenges of the taxation of the digital economy and the broader digitalisation of our economy, the introduction of and experiences with European digital services tax, most particularly in France and also in Spain, is highly useful, highly relevant, and provides some very good precedent and learnings for us all. We are deeply appreciative to have the strong support of the Australian government and most particularly Australian Treasury in holding and sponsoring this briefing this evening. And we really appreciate particularly Marion Makovic's participation in this function today. Although Marion is well known to all of you, by way of introduction, I'll just go through some very brief highlights. In her role as Deputy Secretary of the Revenue Group in Treasury, Marion's team provides extensive advice to the government on revenue and taxation policy matters. This includes analysis of economic and social effects of tax policy proposals, the provision of revenue forecasts and costings, the most important numbers, instructing Parliamentary Council on the new laws, and supporting the passage, most importantly, of this taxation legislation through the Parliament. It's a critical role. But Marion is very experienced and has had previous experience in the International Monetary Fund for 5 years, and also with New South Wales Treasury in a similar role. But most importantly, in recent times, she's been a key member and representing Australia on the OECD Inclusive Framework, basically since 2016, and became a member of the steering group of the Inclusive Framework in January 2020. And this focus and the work of the framework, most particularly amongst other things, includes work on the taxation of the digital economy. She's also recently been appointed in January 2021 as Vice Chair of the OECD's Committee of Fiscal Affairs Bureau. I'm also delighted to introduce my two close tax partner colleagues and friends, Rafael Berra, based in Paris, in lockdown still, and I'm told it's raining in Paris like it is here. But, you know, it's great to have you on board, Rafael, and also Carlos Rodriguez, who's based in Spain, in Madrid, and he's in the office today. So, you know, freedom is emerging in Madrid, which is great to see. The format for the briefing is as follows. There'll be a presentation or overview from Rafael and Carlos on the European digital tax regimes, most particularly, of course, the Spanish and French ones, but I'll also cover comparisons with the UK and Italy. And then we'll enter a moderated panel, which most particularly will have some key comments and observations and thoughts from Marion in her Treasury role. And then we'll have some online chat, Q&A session. So the way to address your questions is to you know, place them on the chat mode on your monitors. So before I hand over to Rafael and Carlos, I'm very pleased to announce, or at least note, the recent appointment, which Nick Tadmore tells me is more important than Matthias Corman's appointment, and that is as chair of the supervisory board of EFA. And congratulations, Niv. And I think you might be on there somewhere, but we might even hear from you later. But with no further ado, it's my great pleasure, and there are slides to lead you through this. It's my great pleasure, and I should have introduced Palami, who's my rescue assistant today. So over to you, Rafael and Carlos, to lead us through that overview of the 4 European tax systems, digital tax systems. Slides on. Go on. Hang on. We're just admitting a few other people. Very good. Yes, please. We'll share the screen now, so you should be able to see the slides. Move on from the next slide, sir. Go to the second slide.
This is the one.
Yep. There we go. Okay. Over to you, Rafael. We'll go to the next slide. Hang on.
Okay, thank you very much, Jock. So it is our great pleasure to introduce this comparison of the existing digital services taxes in Europe, including the UK, and with a particular focus on France and Spain by myself and Carlos. We may move directly, I think, to the first slide where we have a comparison. What I can say as a matter of introduction is that regarding France, there were a lot of endeavors to have something acted at an international level, because France, as you may be aware, is one of the countries with a large treaty network, tax treaty network. So there was the idea to have an effort at OECD level, then an initiative at European Union level with a draft directive that was drafted in order to obtain some common commitments by the member states of the European Union. But as you are aware, it did not go through. And as there was a lot of push to have this tax policy vis-à-vis actors of the digital economy, France decided to act unilaterally with the implementation of its own digital services tax, and was followed later by various countries, as you can see in this comparative table. But still, France implemented the tax with an effective date as January 2019, even though the law was implemented in July 2019, it was retroactive. And now, although there was some back and forth regarding the collection of the taxes, we have the DST that is alive and well in France. We have some French tax authorities guidelines that were published in 2020, so last year. So we have some, I would say, some comments and experience of the French tax authorities in that regard. You can see also the scope. There are some variations depending on the countries, but we have, at least regarding the EU countries, we have really two main concepts of services within the scope of the tax. The first one is digital intermediation services. So it's really the concept of when you put at the disposal of someone a digital interface, so that one person is able to get in touch with one another through electronic communications, and so to interact with one another. So it's really a concept where through a digital tool you can get in touch with each other in various types of instances, being networks or other marketplaces, for instance. Targeted advertising is the second, I would say, class of services that are targeted. And it's in particular where you have specific advertising messages based on data that are collected from users. So it's a way to monetize, I would say, the profile, the data collected from various users in the cyber space, if you want, that are caught by this new tax. So targeted advertising services. We have also some thresholds. You see in particular that the UK has some particular features in that respect. And on the computation on the tax base, one important point is what we call the national presence ratio, or the French presence ratio, because where you have a group with various activities all over the world, you need to define some connections, some nexus with France in particular. And we have some guidelines that specify how it is computed for each type of services. For instance, for marketplaces, you will need to define on sales, either where you have a French buyer or you have a French seller, and compare that to the total number of sales. So we have various ratios that define how it is computed. And on the rate, you see it's 3% for the three EU member states, the UK being lower at 2%. Carlos, maybe you want to comment on the specific features of Spain in that respect?
Yes, thank you, Rafael. Good afternoon, evening to everyone. Well, a couple of issues regarding the digital service tax in Spain. The scope of services is quite wide because when we are talking about online intermediation services, we are talking about intermediation services through marketplaces and also social media. Both are within the scope of the tax. Another important feature, I think, for practical purposes is to understand that the threshold that the taxpayer worldwide turnover should be more than 750 million euros. This turnover does not necessarily need to be based on digital services. So it's a turnover of whatever business the taxpayer is doing. So this tax may affect companies of different sectors, not necessarily only tech companies or highly digitalized companies. If they operate in the digital space, they may be captured by this tax, and the revenues to be within the tax. The revenues obtained in Spain the amount is 3 million, which is quite low compared with other countries. So I think that in this sense, the Spanish tax may be wider than expected or than initially planned. I think we can go to the next slide, Jock,
Yeah.
please.
There we go.
Thank you.
Thank you very much. So here we have highlighted the differences between the various countries, in particular regarding the taxable services. Actually, for France, there is a slight difference regarding data transmission services, but it's considered as embedded within the targeted advertising services. So you can see that actually the UK is quite different, I would say, from the three other EU member states. We have slight variations for France, Spain, and Italy, but there's quite a difference between the two, actually. So, important point to keep in mind. The other point relates to the intra-group transactions, because the idea initially would have been to consider a group. So in particular, because we are talking about large multinationals that are organized in various countries, and that may have a lot of subsidiaries or branches, and so to have a consolidated approach. And actually, the DST in France can also be filed on a consolidated basis. So the idea would be to normally ignore interco, so intra-group transactions. But for France, there is a sort of restricted approach in that regard, is that you will exclude a service, but only if it's pure intra-group service. That is, if you do not supply this type of service to third parties. Otherwise, it will be considered that it is like a service provided to third parties. So it's a rather restrictive approach, and which tends to broaden the scope of the tax. So this has been notified in the French tax authorities guidelines, and it's an important point to bear in mind. Carlos, I don't know if you want to comment on the specific.
Yes, very briefly. One of the controversial areas of the Spanish DST is that intra-group services in general are subject to the tax. This is a difference, a significant difference with the proposed directive of digital service tax, in which the Spanish, and I guess probably the Italian and French tax is based. And only if the service is provided within companies in a group that are owned by one shareholders, 100% participation. Only in that case, the service is exempt. And this, of course, may give rise to double taxation issues for operations within a group. And I'm thinking now about the potential double taxation on data, transfer of data within a group. This is really something very controversial that is being discussed a lot in Spain about this clause.
So going to the slide, so we have seen that we had quite the same worldwide thresholds generally, but we have some local thresholds that are different. So as Carlos highlighted, the one in Spain is lower, and in France we had kept 25 million. That was more in accordance with the draft directive. Carlos, maybe you want to comment the last.
Yeah, well, as I said, the worldwide threshold is not limited to revenues of digital services. The tax-based calculation in Spain, it is true that rules are different depending on the service, but the general idea is very similar to the Italian and the French tax, is that once you have the global revenues of a service, the proportion of the users located in Spain compared with the proportion of total users of that service, that determines the taxable base in Spain. So point of connection is always the users of the service if they are located in a particular territory, in this case in Spain.
Yeah. Regarding the calculation, we have some specific comments for each type of service. So in particular on digital intermediation, we have all amounts paid by the users are taxable, except for the transactions that are considered as really independent economic transactions. We have also some specific rules where we have specific taxes, like on alcohol, where it's a specific kind of rule, but there are some carve-outs to avoid additional taxation. And also for targeted advertising, it's based on the amounts paid by the advertisers broadly. And the French tax authorities guidelines provide certain allocation rules in order to avoid a double taxation and to determine whether you fall more on the side of digital intermediation or targeted advertising. But the idea, for instance, if you have advertising based on user data, is that you will fall within the scope of targeted advertising. So you have certain, I would say, tiebreaker rules. Of course, it may require more in-depth analysis on a case-by-case basis, but the tax guidelines at least have set out the need to avoid the double taxation, or the fact that you should only be taxed a single time. That's it. And on the, we commented on the rates. I would say at the moment, the rates are rather low if we compare that to corporate tax. So of course, it's a tax on turnover and not a tax on profit. So that's also explained the level of the tax for the moment. I think we can go to the next slide. Yeah, it's a little bit additional points on the background. We discussed that initially. I would say it's still the idea for the French DST that it would be repealed if there is an international agreement on the framework to tax digital services and more generally to tax multinationals differently to take into account the digital economy. The background also was that the French tax authorities were aware that it was very difficult to rely on the permanent establishment concept as established under existing tax treaties to I would say tax multinationals and digital companies. We will see at the end of the presentation that we have some recent case law which actually is more favorable than the French tax authority thought, but it may be not the end of the story. That's why we had this push of the authorities, and even there were discussions also and strong contestations from the US, in particular during the Trump presidency, but the tax was maintained, even though we had some collection deferral 1 year ago. It was still put in place, and it has been collected, and it's there until there is a more international framework in place.
Yeah, well, in Spain, the tax was announced to be implemented in 2019. And this was because there was a lack of consensus at the international level. I think that the two key drivers of the implementation of the tax was, on one hand, that the public opinion, like in many other countries, I guess, there is a state of opinion that big technology companies do not pay the fair amount of taxes in Spain. And this combined with the needs of public spending that has been obviously increased due to the COVID pandemic, this conducted inevitably to the incorporation of the DST, implementation of DST. It's quite recent in Spain, as you may see. It enters into force on January 16 this year. And the first filing period will start on July this year. So not a lot of experience so far on practical application, but one of the things that is I think interesting about the Spanish DST is that it is implemented as a temporary tax in principle until there is an international consensus on taxation of the digital economy, Pillar 1 and Pillar 2, or even a consensus in the European Union. But there is not sunset clause in the law. So this is not automatically a transition between DST and the new scheme. So it will probably take longer to adapt or revoke this tax and give rise to the new one. It is unclear. But well, initially it's temporary. My understanding, and I think that the understanding we can discuss about this later, is that even though consensus at the OECD level may be reached this summer, which is quite optimistic, I think that practical implementation of the result of that consensus will take probably much longer. So DST is temporary, but it may well be here for a couple of years. That's my guess.
So some data, I would say, some experience or track record on the French side. So there has been some revenue collected. You see the figures, 350 millions and 400 millions respectively in 2019 and 2020. We had some information on the companies concerned. Well, many were US digital companies, but also some Chinese, also a French company, so Criteo, I think, and some in the EU. So it's not only targeted in practice to US companies, even though they were I would say, the usual suspects. Initially, we had some comments published by the French tax authorities last year. Actually, they had begun with the easy part on the collection mechanism, but then we had some more detailed comment about how you assess the tax base and what is the nature of the service rendered that is taxable. So now we have more precise guidelines in that respect. We had some deferrals, as I had mentioned, in 2020, but eventually it was repealed, so it had to be collected. And some, I would say, negotiations with the US, in particular, are more aggressive during the Trump presidency. But still, that has not changed the fact that it is implemented under French domestic law. So we have some. I would say some experience in that regard. Although we do not have yet information, we will come to discuss. I would say challenges and possible challenges in court. For the moment, we do not really have public information on that. It's more comments provided by the French tax authorities and comments provided. In particular by the authorities of the French Parliament on the finance law to comment on new tax.
Well, in Spain, We still do not have collection figures. The expected collection are 968 million euros, which I think is a very optimistic estimation from the government. As I said, the scope of DST in the first months of application, we realized that the scope of DST is maybe broader than expected, as it is drafted today. So I think it's important for multinationals operating in Spain to make really a kind of tax assessment or risk assessment of whether these tax may apply to them. And regarding the effects that we are seeing in Spain, the first one is that some of the taxpayers are charging the tax to the users. And as an example, Google announced that it was going to increase 2% the cost of online advertising services in the web. So at the end of the day, we are saying that this tax may easily be charged to users, and in some aspects, we may find out that this tax is finally imposed to small and medium Spanish companies, and maybe also difficult in the competitiveness of the Spanish companies vis-a-vis other countries. So this is something to take into account. This tax is defined as an indirect tax and is easy to translate to users.
Yeah, the same issue has arisen in France, where we know that there has been a shift in some instances by certain multinationals to users. So it may have the effect of economic operators to check their contracts to see where you have gross up provision or where there are any contractual arrangements as to who bears the burden of the tax. And so it's a point to take into account.
Very good. Thank you, Carlos and Rafael. Perhaps if I can just sort of open it up now, and we will come back to more of your slides, but maybe if I can direct a question to Marion, given Australia's been pursuing the global sort of approach to some sort of, taxing mechanism, whether it's through Pillar 1 or Pillar 2 or more broadly. And also I know that Australia has looked at, some sort of consultation on a possible digital services tax. What sort of observations do you have on the Swiss, the Spanish and the French experience?
Yeah, thanks, Jock. So yeah, it was really interesting actually hearing from Rafael and Carlos on the experiences in France and Spain. As you pointed out, Jock, we did run our own process here in Australia in 2018. There was a very live conversation even back then. And Australian Treasury, the Australian government, put out a paper that was obviously drafted, in the first instance in Australian Treasury, but we put a paper out there, and basically it was a consultation paper seeking to ask the question on what were the views around introducing a digital services tax. And I think that in the course of preparing that consultation paper, a lot of the issues that have been raised were actually considered during that process. And just to pick on some of the issues that have been highlighted in that, I think that there were questions asked around what would it mean to go out on a unilateral basis as distinct from having a multilateral consensus. I think that there were questions around, how did you actually ring fence it or, sort of determine a scope. I think there were questions around what were the appropriate thresholds or rates and a whole myriad of design features, which obviously have translated through in very real space as France and Spain have talked about their experiences. And I think, of course, the issue was raised around what might it mean for other countries, including the US and their view on those measures. So all of those things were part of the set of considerations. And I will say that at the time, the pretty strong feedback that we got from stakeholders was that it was probably not sensible to pursue a unilateral path. And so, as people now know, in Australia, we, in fact, at the time, the government came out and said that, in effect, they would not be pursuing the unilateral DST, and that, in fact, we would be putting all of our efforts into the OECD-led process and trying to basically get consensus around a multilateral approach. And that has remained our position over the past couple of years, and we have worked quite actively within the OECD and our participation in the steering group towards trying to get that multilateral consensus. I think that some of those issues are not only in terms of then the response by some of those larger, specifically US companies to the announcements, it is an interesting observation. I think that it's also been interesting, and this may come out in terms of some of the questions, around this approach of having a unilateral measure pending multilateral consensus. So, yeah, look, it's an interesting issue, but I would go back to also making one point, which I think Carlos kind of brought out a bit in the Spanish situation. And I do think that at the end of the day, when you look at the decisions that countries are making, it does strike me that often a decision as to what you do can often be the outcome of a broader set of economic, social and political influences at work. And so it's sort of like, it does strike me that every country will be different because it will be facing a different set of economic, social, political, fiscal pressures on them. And just to sort of open up another line of, thought, I will say that I do think that COVID has changed the fiscal parameters somewhat. So I think that that is going to be an interesting question mark. And also, as you pointed out, Jock, I think that the US position has itself, certainly with the change in administration, it opens up the opportunity around, is there, a slightly different set of perspectives and focus on multilateralism that could be important in terms of achieving that mid-year outcome. So I just wanted to throw out a few general thoughts there, and hopefully maybe we can pick those up in subsequent questioning and conversation.
Terrific, thank you, Marianne, very much. Look, we'll come back to some of, it's not, and maybe we should just table, it's not as though Australia's, not address this sort of area. There've been developments like the MAL and the DBT and more broadly, and some of the GST changes dealing with digital goods and services. But it's a really interesting area in terms of the array of options and the experiences of France and Spain in particular, and also the UK and Italy. But although Italy's pretty early days. Look, we might go back to the next slide, and Raphael, just while we're dealing with that, an observation is that those who pay, the digital services tax in France has been relatively concentrated. I think you mentioned 30 countries, 30 companies, I should say. And big multinationals, including a couple of French ones. Is that been? It's really your experience. It's for the big players. Obviously it's got to be over the threshold, but it's a very concentrated sort of large multinational sort of tax. Is that a fair comment?
Yeah, that is correct. Although, as I mentioned, it's not only US multinationals, because there are also Chinese one. I think there is Alibaba. There there is a French company called Criteo, which is not exactly like a GAFA, but really with a business model focused on services within the scope of the DST. So yeah, it has the impact of targeted particularly some multinationals, but we see it's not only the US entities. I think
Yeah. No, I think you're following that is, I mean, this is clearly a tax addressed to big multinationals, all kind of multinationals, as I said. But one interesting thing that at least in Spain, the Spanish government has introduced a clause in the law that they can change the thresholds on an annual basis in the budget state law. So they can easily, at the end of this year, reduce the threshold of the taxpayer turnover or even the threshold of the Spanish activities. So it is quite flexible, and maybe next year, new companies not that big may be also affected by this tax. It pretty much depends on the collections, I guess.
Absolutely. Okay, very good. So we might move on to some of the challenges that you've experienced and perceive in the future in applying the tax. And there's a very good slide that you should be, yeah, okay, I'll come back to that.
Yeah. Maybe so to comment on the French aspects, as you may guess, there is a question about whether the DST could be assimilated to substitute to corporate tax, and so considered to be caught by tax treaties, which avoid double taxation and say that you need to rely on the concept of permanent establishment to collect corporate tax. So this is a possible ground of challenge. We are aware that some cases have been filed or prepared on that basis to contest the French DST. We do not know their outcome yet, but it's still there. And it's in particular because there were some declarations of the government that really it was intended to be a substitute to corporate tax. One important case also is about the French Supreme Court, the French Conseil d'État of last year. And so it's a bit tricky. It's about the concept of what is a privileged tax regime under French tax law. So it's a technical point, but basically to determine whether a non-French company benefits from a privileged tax regime, you need to assess its burden of income tax or corporate tax. And what the Supreme Court has said is that if there were locally DST, a digital service tax, it should be taken into account as would a corporate tax. So you could deduct from that reasoning that the DST should, to some extent, be assimilated to a corporate tax. So it's interesting. Even though actually regarding the collection mechanism, it works really like an indirect tax or like VAT, but really more like an indirect tax actually, because we do not really have a deduction mechanism. I think that was one of the questions raised in the chat. But we have this point that there were also discussions about the fact that it's an additional indirect tax under EU law. But here it seems more difficult because there are some cases that allow to introduce this type of tax. Stated could also be the question whether it's sort of discrimination favor, I would say, non-digital enterprises. So it's probably a looser approach. We need to determine precisely who is benefiting from the state aid. And well, the fact that if you look at where the tax is collected, it's not only the US multinationals will maybe also help the French tax authorities in the sense that we cannot say that it's only targeting to foreign entities. So it may be more difficult than to argue that it's in practice state aid, but still there will be some challenges in the coming year, and we don't have yet case law. It's too early. It's only two years, but we still expect to have some news on that front in the coming years.
Yes, in Spain, there has been similar discussions about the state aid and non-discrimination, potential challenge in the tax based on EU law. But I think that the most controversial issue in Spain now is around the qualification of DST as an income tax, and whether this qualification as an income tax, even though the tax is regarded as an indirect tax in the law, but the features of the tax are not clearly of an indirect tax. And if it is regarded as an income tax, to whether tax treaties may apply, and therefore for some countries, this tax will not be, or for some taxpayers, this tax will not be applicable if you don't have a permanent establishment. So this is really the big discussion now in Spain. I think that this should be addressed on a case-by-case basis, because the wording of the treaties is very different, and it's important, the wording of Article 2, in order to assess this potential claim. But is there, and there are claims, and there will be more probably on this. And the other topic is double taxation. It is clear that digital service tax is taxing revenues that are also taxed by corporate income tax. It is also clear under the Spanish regulations that there is not a tax credit for digital service tax. There is also the topic about intragroup services that also are not being exempted will give rise to double taxation. So this brings some questions about if this tax respect the constitutional principles on taxes. These are the two main questions that are now there in Spain for the challenging of this tax.
Thank you, Carlos. And look, the next slide touches on an area where that come through. Hang on, what's happening here? The next slide, while we're just getting it up, deals with our expectations around the future, given the change of US administration, Matthias Cormann's appointment as Secretary General of the OECD, hopefully providing very strong leadership and a coordinated approach. And Marion, your key role as Australia's representative, and you've seen all the machinations. You mentioned the lack of fireside chats or coffees, beside the table because you can't physically get together. But hopefully that environment will be restored very, very shortly. I'm sure you enjoy your trips to Paris and wherever else those sorts of meetings are held. But maybe if we start with you, what is Australia's expectations going forward, and can we for a global solution, or where do you think this will end up? Carlos mentioned that even if we get to a global solution, it might take quite a deal of time to implement. Any thoughts around that? Because I know you're best placed in this whole country to talk about that.
Oh, wow, that's a lead in. So look, as I sort of mentioned earlier, and as people know, Australia's been very committed to pursuing a multilateral approach and trying to get that multilateral consensus. And that kind of remains sort of our position. I think that all countries have worked really, really hard over the past few years towards getting that reaching agreement. Look, it has been a challenging time, and COVID was, an absolutely, massive event to occur in the middle of a multilateral, consensus reaching sort of process. So you can't underestimate the fact that not only did it change the, as you've pointed out, Jock, the physical environment in which we were trying to basically negotiate agreement, but it itself has had massive economic, social, political and fiscal consequences. And we're still working through those, right? And you cannot underestimate the impact that has had and the focus and the challenges of trying to deal with that crisis at the same time as actually trying to sort of address questions that go to fundamentally changing a framework that's been in place for over 100 years. So I kind of want to make that point at the start. That said, look, I think that we are optimistic about the chances of, sort of reaching consensus. I do think that the incoming US administration has been very positive about, working in that multilateral framework to try and achieve something. And I can tell you that I do think that everyone remains really, really focused on trying to do that. And I guess that we've also now had, a year's experience in dealing with these virtual platforms in terms of using Zoom and other, sort of platforms to try and reach agreement. So maybe we're getting better at also negotiating and having virtual coffee breaks or whatever over these platforms. But, I think that, I do remain optimistic. I think that there is a lot of goodwill. I think that there is a lot of expectation, and you cannot underestimate the power that expectation and the fact that, there have been perhaps understandable reasons for the delay, but nonetheless, there is a world of expectation on achieving that. And I think that will be an important issue in its own right in terms of achieving consensus. I think that the US's comments have been, quite supportive and have given people an expectation as well. So there's a lot of pressure on achieving that mid-year deadline, and there's a lot of goodwill. So that pressure, that goodwill, the fact that many countries are focused on trying to achieve that multilateral consensus, I'm kind of optimistic around the fact that I do think it would be possible to deliver that. Now, that brings me to the second kind of arm of your questioning around, okay, but what does that mean for implementation? The short answer is, I don't know. It kind of depends on, I guess, at what level the agreement is reached and how, I think that we've got some quite detailed blueprints, but at the same time, as is clear to everyone, there are some very high level decisions that need to be made, and they may very well have consequences even for some of the detailed thinking. So there are some important questions around what can you agree by the middle of the year? Even if you can, what does that mean for implementation? And in particular for countries that have already introduced measures, what does that mean for how those unilateral measures interact with whatever agreement is reached? So I'm optimistic, but there is a lot of work to be done both on, Pillar 1 and Pillar 2. And, I suspect that there'll be still quite a few late nights between now and June, early mornings in terms of getting that agreement.
Thanks, Marion. That's terrific update, and great to hear that you're very optimistic. So maybe if I just share, if Rafael and Carlos can sort of add to the, France's and Spain's expectations and how you see going forward. Will a mid-year agreement be reached? How do you see it?
Well, in France, the government has been a strong supporter of OECD initiatives. So I think there will support move in that trend. There were some discussions also about Pillar 1 in particular, and whether it would be favorable also for certain French multinationals with clients abroad. But all in all, there is a support of OECD initiative. So yeah, there will be a push in that respect. Of course, there are many other countries that have to be agreeing to that, but the French government, the French Ministry of Finance supports that direction.
Yeah, well, Spain is the same. I think the Spanish government has fully supported the OECD initiative. They would like to have a consensus as soon as possible. The non-desired lateral effects of this DST may force also the government to try to reach even sooner a global solution. So I think we are optimistic. Also, the change in the U.S. administrations, as Marianne says, and I mean, it seems that everything is going well. Timing is probably one of the questions.
Very good. Look, we have time. I'm very conscious of time. We have a very important question from the floor from Sarah Blakelock, all the way from London. She asked, a key recent development is the EU Commission's proposal to introduce its own digital levy to support the EU's borrowing and repayment capacity. The Commission has said it's not intended to interfere with OECD's work, notwithstanding the EU Commission states the motivation for doing so reflects concern about the under-taxation of digital services. For all of you, but obviously Rafael and Carlos, you know, what do you think about the EU proposal? Does it have resonance around your regions? Marianne, given that it will take considerable time to introduce the OECD proposals, pillars 1 or 2, if consensus is reached, will Australia again turn its mind to an interim solution, perhaps one modelled on one of the European digital service tax systems? There's a bit in that. Maybe over to you, Rafael.
Yeah, on this this EU proposal, my view, but I do not have, I would say, insider information, would still be that the government would still put that priority the OECD approach, although they will consider the EU proposal as an alternative if necessary, but as policy has always been to be suggesting a more global and international framework approach. So I think that would still be the priority of the government, even though if there is something missing in that respect, the EU directive could still be something considered as it was the case some years ago.
Yeah, I think this project brings back the original EU DST proposal back in 2018. I think it will put some pressure also in the negotiation at the OECD level. And I also think that some countries that did not reach an agreement previously on the first proposal will probably don't want to reach a new agreement on this one. I'm thinking about countries like Ireland or Denmark, that they are supporting a global agreement more than a regional approach to this. But yeah, I think it will put some pressure on the negotiations too.
And Marianne, finally,
Yeah.
easy question.
So, yeah, I'm going to make a couple of observations, and I know that there will be a natural temptation to link them, but I would really urge people not to, because I'm simply making the two observations. And partly because of the way that Sarah herself, you know, sort of posed the question and explained the factors behind it. And the first observation I'd make is that I do think that the fiscal circumstances that, you know, most countries around the world face today are already quite significantly different to what was in place 2 years ago. That's a simple reality. That responding to this crisis has really, you know, had a fundamental impact on countries' balance sheets and fiscal circumstances. And it's not a surprise to me that countries will be thinking, you know, about that as they've sort of turned their minds to both the spending and the revenue side of their fiscal balance sheets. So that's observation one. The second observation is that you've actually seen a very large array of countries each formulate a position, you know, in response to the circumstances that we find ourselves in, and the whole set of views that they have around digital companies, whether or not you can ring fence the digital economy, just what does this mean for their tax systems? And when I say a vast array, some countries have actually implemented digital services taxes, others have enacted them and indicated that they will start collecting them at some point, perhaps if an OECD process doesn't deliver for them. Others have said, well, we're waiting to see what happens with the OECD, but we will go to a digital services tax if the OECD doesn't deliver. I actually give credit to countries for believing that the way that they articulate their positions is very important to the way that they see those issues. So I will say that Australia consciously chose the wording that we did 2 years ago, that we are working on a multilateral consensus and that we are putting our energy into achieving multilateral consensus. That was our position in 2018, and that remains our position at the beginning of 2021. Full stop.
Thanks, Marion. That's a very clear and final and concluded position, and great to hear. Look, I'm very conscious of the time, and we are sticklers to the time, and we're slightly over. I think that it's time now to close this session. I know that you can't show your appreciation because we've got you on mute, but on behalf of all the members, on behalf of all the attendees today, I'd like to extend our very, very sincere and lengthy thanks to Marion from Australian Treasury, to Carlos and Rafael, my two dear colleagues from Madrid and Paris. It's been terrific. I hope you've all found this very illuminating. It's a really important time in the development, as all international tax issues are, and we look forward to progress over the coming months. And please feel free to reach out to any of the speakers that have been on our panel. So all the best on behalf of IFA, on behalf of DLA Piper International.